And so a lot of times people come in and they go, well, I want this rate, but and they'll be like, well, I'm going to put 30% down. So even this week, probably 4 to 5 clients I talked to that were going to do a 30% down on a 15-year loan, but because they had money in their house, and that's what I thought. Then after talking to them and having and uncovering stuff like, well, I really actually want to save for college education for my kids. I don't have that money, and they were going to use all that and have it in their home. And we're actually, even one of them was like, I'm actually going to only live in here for 5 years. So after talking with them and going over the numbers, we found out we found a different plan. It was usually less money down, investing with a financial planner. You actually got some of these referrals. Let's get a will or a trust because we don't even have our frigging family protected. Do you know what I mean? Sure. So let's invest in protecting our whole family. So this happened. So it took all this time and set up these people. And I tell you, I've gotten more compliments this week than I've gotten in a while, just people going, wow, just because it goes in ebbs and flows, right? But it got me thinking, because after I had these meetings, then I would get some follow-up calls later say, hey, by the way, I got contacted by another lender that's going to offer me a 0.25% lower rate. All right, so I'm like, all right, get back into this deal. And I realized that our mindset is still the same that it was. One is we still think mortgage is a commodity, right? We forget that, hey, guess what? You can't just go, okay, I want this rate and it's done. You don't sign anything right there. It's a 30-day process. There are 8 companies. There are 32 people involved. There are a lot of things that can go wrong during the transaction. And so this is what I want to talk about this week is, like, you've heard this 1,000 times, all the money comes from the same place. And it does. But businesses can set up their structure different. Once it's set, by the way, because it's the way the law works. Like, you can't get paid more. It doesn't matter if you charge extra origination points or less. Nobody gets paid any more money based on how much they charge you, the borrower. It just doesn't matter anymore. But you can still set up your business structure, right? So we set it up the way we do it. To be able to afford better, more qualified, seasoned processors, underwriters. We have the best underwriters, best processors, best SVP of ops in the business. This guy worked with E-Trade. He did $1.8 billion in 1 month. Huge. He knows how to run so that if there's any problems, you can get quickly, right? Because you know how this goes. Matt,
Absolutely.
you especially.
Absolutely.
Actually, you do too, John, because it's like...
I need it back in an hour, really.
Exactly.
Okay.
Boom, 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 boom.
Yeah.
It's like, whoa. So to run a smooth system to make sure you have a good process, but also be competitive on rates, but be able to educate you. I literally took a borrower that was going to do a 30-year fixed F4 in the low 4s, got him on a 5-year arm at 3.25. Like, this is exactly what we need. Saves us $150 a month, and now we can use this to pay off our debt, and we're going to move in 5 years anyway. Great. Then I had actually everybody except for one person went with me this week, even though I'm competitive. But guys, just so you know, if you find a good lender, whether it's me or not, and they are taking the time to ask you the questions about more than just your mortgage, go with that person. Right. Because they're setting the standard that they are going to take care of you not only on this loan, but if something happens afterwards, et cetera, et cetera. People that are cutting margins on the front end to steal your business, that are going after the credit reports and buying the data later to call you and say, I got the lowest rate, man, those are bottom feeders. Right. And if they don't know the questions, like I've talked to you about my article, How to Choose the Best Lender, how to interview them, they're not professionals, and they're not going to take care of you. And if something goes wrong, they're going to be the first to bail. You don't go with the cheapest attorney. You definitely go with the cheapest heart surgeon, definitely not the cheapest insurance. We've proven that over and over again. Cheapest professional, when I talk about attorney. Guys, it's about people that are competitive, that you can trust, that care. And if they care about their business, they're investing in their business, they're investing in you. Go with that person, whether it's me or not. And I'm just serious here because here's what happened. The cheapest person, that was an epidemic pre-2007, right? Everybody was like, you can't do 100% financing with my score. Well, this guy can, and this guy's offering me a cheaper rate, and he's paying me blah, 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 blah. And then we got on this cycle of greed, thinking that you're doing what's better, and it led us to a financial crisis.
Yeah, it'll happen again if we don't learn from that last mistake.
Don't do it. Don't reward bad behavior. Bad good faith estimates that I see all the time that are so sloppily filled out with money, like no origination, but all of a sudden 9 months collected for property taxes that everybody knows you collect 3, just so they can shove it into that other fee later. Don't buy into that. Don't do it, man. If your lender is asking you good questions up front, if your attorney, if your insurance guy, if they take the time to ask you questions, let me tell you, that's costing them time they could spend with another borrower, but they're spending it with you because they care. Right, guys?
That's absolutely.
That's exactly right.
Please don't go back there. Don't do it. We got to make a new way, not just here, but in America. You got to send the right message.